So is your checking and savings account at the bank, is that an asset or a liability? The answer might surprise you. Let's talk about it in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy. If you're new to the channel, make sure to click subscribe, click the bell, so that way you get notified on any and all of our future content. So in this video, guys, we're going to be talking about, is your checking account or savings account at the bank, is that an asset or a liability? Like, let's say you got 10 grand sitting in your checking account or 10 grand sitting in your bank savings account, okay? Is that an asset or a liability? And that's a great question. You know, and most folks, okay, the instant answer is, well, Mike, it's cash on hand. Obviously it's an asset, okay? And, and certainly, to that point, yes. And yes, obviously the money has value. But one of my mentors, very wealthy guy, told me this. And he said, Mike, money doesn't stay stagnant, right? It either grows or it gets smaller, okay? And the reason that I believe, and when I think about bank savings accounts and why I don't like to keep a lot of money in a bank savings account, is because when your money is sitting in a bank savings account, it truly is a liability, okay? And here's what I mean by that, okay? And I want you to think about this. At your bank, how much interest would they pay you per month on that 10 grand? Okay, so if you had 10 grand sitting in your checking account or 10 grand sitting in your bank savings account, how much interest would the bank pay you, okay, on that? And typically banks are not even paying 1%, okay? Banks actually brag if they turn around and pay you 1%. I'll put a picture, what is it? Key Bank comes to mind. And I remember seeing a campaign when I was in Illinois one time, and there was all these flyers and there was billboards everywhere. Key Bank, 1%, come into the bank, ask us about our 1% CD. So it wasn't even the account, it was a 1% CD. So even better, you got to put it there for a fixed amount of time to get that 1%, right? But when you think about that 1%, yeah, you're gaining that, but what are you losing to inflation, okay? See, you gotta remember, we have a system here where our currency is fiat currency. So it's not backed by gold. There doesn't have to be a certain amount of gold somewhere to back up all of our dollars. So we have a system here where they are printing money. And the more money that gets put into circulation devalues the current currency supply. It dilutes it. And the more money that's out there, right? Obviously, the more money that's out there, the more things cost, okay? So really inflation is like a hidden tax that we all pay for the ability to print money. And inflation has been hovering. And as we can see here, the current inflation rate, is roughly about 2%. Whatever your bank is paying you in interest, if it's under 2%, the longer your money sits in that account, it is truly a liability. It's like you have this snowball of money that is, it's like there's a hot lamp on there called inflation. And you're trying to put this, extra cooling on it called rate of return, okay? So, but if the rate of return is smaller than the inflation number, eventually that number is just gonna continue to shrivel, right? In that sense, eventually that 10 grand, if you just left it in that checking account forever, eventually it would turn into nothing due to inflation. So that's what I mean by checking accounts and savings accounts are a liability. The longer you leave your money in those accounts, it is technically losing your money. It's technically losing you money every second of every day that your money is sitting in one of those accounts. Now, am I sitting here telling you no, not to have any money in savings or not save any money up? No, I'm not saying that. But are there different vehicles where you can be putting your money, right, and giving you the liquidity, right? People typically, when they want to have some money in their bank savings account, is because they want to have quick access. They want to have some liquidity and some access to cash if they need it. There's plenty of other vehicles that are going to give you a higher rate of return, where you can put in some extra capital at a higher rate of return and have very quick 1 to 2 business day liquidity. One of my favorites is a permanent life insurance policy. And again, there are limits, things like that, to what you can put into these policies. But the cool thing is you can have more policies. But I love cash value policies for that purpose versus just using a traditional bank savings, which is not going to give you a very great rate of return, and is really going to be more of a liability for you the longer you keep your money there. Get your money into a vehicle that's going to give you a better rate of return. Now, right, I would feel much better about having $10,000 worth of cash value in a permanent life insurance policy than I would about having $10,000 in a bank savings account earning me nothing and really not able for me to leverage, okay? 10 grand in a cash value, I can leverage against that and get a loan. That money stays there growing for me. I can loan against it. That money is sitting in the bank savings account. You can't really take a loan against that, okay? You could use it, okay? But once it's gone, it's not in here working for you. Not that it was really working for you anyway there in the bank savings. And as you can see here, according to Value Penguin, again, what these checking accounts are paying out in interest rates is, again, much, much less than even 1%. So that's why leaving your money in a bank savings account can definitely be viewed as a liability. If you leave it there, eventually it's just going to dwindle away because of inflation all the way down to zero. Don't want to leave your money there for too long. Get it into a vehicle that's going to help you create some, maybe be a more leverageable asset for you, a for sure asset, but something that's going to grow at a greater rate of return towards actually beating inflation. You're actually growing your money and growing your wealth. So hopefully you guys found value in this training, guys. If you did, give it a comment, give it a like below. I will see you guys in the next video.